Top 3 Quantum Computing Stocks to Watch in 2025. Breakthrough Alert. Quantum computing is on the verge of transforming our world in ways that seem straight out of science fiction. Imagine solving intricate problems that today's fastest supercomputers would take years to crack, all within seconds. But here's where it gets controversial. Skeptics argue that practical, large-scale quantum machines are still decades away. And this is the part most people miss. By investing early, you might be positioned at the forefront of what could be the next technological revolution after artificial intelligence. Quantum computing uses quantum bits or qubits, which unlike conventional bits can exist in multiple states at once thanks to quantum superposition. This remarkable property enables a quantum processor to explore many possible solutions simultaneously, making it ideal for challenging tasks such as breaking cryptographic codes, simulating drug molecules down to the atomic level, or optimizing complex logistics networks. For long-term investors, carefully selected quantum computing stocks could offer a unique chance to ride the wave of this high-growth market. If you're serious about diving deeper, TipRanks Premium is currently available at a 50% discount. Subscribing unlocks advanced analytics, proprietary datasets, and expert commentary that can sharpen your investment thesis. You can also sign up for TipRanks Smart Investor Picks, which delivers hand-picked recommendations to your inbox each week, saving you hours of research. To pinpoint the most promising names, head over to the TipRanks Quantum Computing Stocks page. There you can sort and compare companies by analyst consensus ratings, price targets, smart scores, and critical technical indicators. Today we've filtered the list to showcase 3 stocks with smart scores of 8 or higher, an indicator that analysts believe these companies could outperform the broad market over time. 1. Honeywell International, HON. Honeywell is at the leading edge of trapped ion quantum systems, a technology where individual ions are used to represent qubits. These systems benefit from higher coherence times and lower error rates compared to other approaches. Honeywell has made significant progress in quantum error correction, a method that identifies and fixes calculation mistakes automatically, and has formed global partnerships to bring commercial quantum applications, particularly in finance and cybersecurity, to life. Analysts at TipRanks currently rate HON as a moderate buy, and the stock carries an impressive smart score of 9. 2. IonQ. IonQ recently closed a $1 billion equity financing round to scale its hardware infrastructure and extend its reach to international markets. Its quantum platforms, Forte and Forte Enterprise, are already delivering up to 20 times performance improvements for clients in sectors like pharmaceuticals, materials science, and logistics. Looking ahead, IonQ aims to develop a 2 million qubit machine by 2030, which would represent a staggering leap in computational capacity. The stock holds a strong by consensus among analysts and a smart score of 8. 3. RTX. RTX is advancing superconducting qubit technology, focusing on quantum error correction protocols and scalable cryogenic electronics that keep qubits operational at near absolute zero temperatures. This work dovetails with the company's existing aerospace and defense solutions, potentially accelerating real-world adoption of quantum systems. TipRanks analysts have assigned RTX a strong buy rating, and the stock also boasts a smart score of 8. Some investors argue that quantum computing remains too speculative, and that real-world breakthroughs will take much longer than anticipated. Do you side with the optimists who believe today's valuations are justified? Or do you think it's wiser to wait for more concrete progress? Which of these companies do you find most compelling, and why? Share your thoughts and join the debate below. Disclosure. This content is for informational purposes only and does not constitute financial advice. If you spot any errors or have concerns, please report an issue. Why billionaires are investing in quantum computing stocks. Billionaires are snapping up this quantum computing stock at an alarming rate. Spoiler. It's not IonQ or D-Wave Quantum. In a world where generative artificial intelligence, AI, is becoming increasingly prevalent, a select few quantum computing stocks have seen remarkable growth over the past year. This surge may be fueled by the belief that quantum computing could be commercialized sooner than anticipated, or it could be that these companies are finally demonstrating significant advancements. Regardless of the reason, the situation is intriguing. D-Wave Quantum has skyrocketed by over 1,700% in the last year. while IonQ has surged nearly 450%. Despite these impressive gains, billionaire investors are focusing their attention on a more substantial quantum computing stock. Billionaires are aiming higher. While D-Wave and IonQ show immense promise in the intricate realm of quantum computing, it's essential for investors to recognize that when groundbreaking innovations emerge in technology, the major players in the industry, often referred to as the Magnificent Seven, are likely to be involved. Alphabet, GOOGL, the parent company of Google and YouTube, is one of these Magnificent Seven companies making strides in quantum computing. In 2023, Google achieved a historic milestone by completing a computational task more efficiently than even the fastest supercomputers available. This remarkable achievement was partly due to a significant new feature. Google's quantum research team revealed that increasing the number of qubits can help reduce errors in computational functions. This is a monumental breakthrough, as adding more qubits typically leads to more errors. Qubits serve as the fundamental building blocks of quantum computing, much like bits are the basic units of classical computing. While bits can represent either a 0 or a 1, qubits can exist in more complex states, allowing them to represent both 0 and 1 simultaneously. This unique property enables quantum computers to perform calculations that are far more intricate than those handled by traditional computers. Increasing the number of qubits enhances the power of the quantum system, but it also raises the likelihood of data errors. The Willow chip's advanced error correction capabilities could pave the way for stable quantum computers that maintain reliable data flows, operating on a much larger scale than the rudimentary systems we have today. Although there is still a long journey ahead, many experts are optimistic that quantum computers will eventually tackle extremely complex computations more efficiently than even the brightest human minds. This capability could transform various industries, much like the potential impact of AI. Currently, Google is working on developing a 100-qubit quantum computer. Billionaires have certainly taken notice of Alphabet's progress. In the first quarter of 2025, Millennium Management, led by billionaire Israel Englander, increased its equity long position in Alphabet by an impressive 151%. It's important to note that Millennium operates as a multi-strategy hedge fund, often referred to as a pod shop. In this structure, portfolio managers are employed by the firm and utilize company capital, but they enjoy considerable autonomy in their investment choices. This means that while Englander may not have directly made the decision to buy Alphabet shares, he likely had a significant influence on the choice. Other billionaires such as Ken Griffin, who manages the multi-strategy hedge fund Citadel Advisors, have also raised their stakes in Alphabet by approximately 10%. Similarly, billionaire David Tepper's fund, Appaloosa Management, has increased its position in the tech giant by 7%. Is Alphabet stock worth buying beyond quantum? Given Alphabet's vast size and the potential of its various business segments, these billionaires are likely investing in Alphabet for reasons beyond just its quantum computing division. While quantum computing holds promise for future growth, many companies in this sector are not yet generating substantial revenue, as the technology has not been fully commercialized. Investors might perceive Alphabet as undervalued, with its stock currently trading at around 19 times forward earnings. The company has faced challenges, including a successful lawsuit by the Department of Justice regarding monopolistic practices in digital advertising, which has led to calls for the company to divest its Chrome search business. Additionally, there are ongoing debates about whether AI chatbots like ChatGPT and Perplexity could disrupt the search market, which constitutes over half of Alphabet's revenue. Nevertheless, Alphabet boasts several rapidly growing businesses, including YouTube and Google Cloud. The company has also introduced Google Summaries through its Gemini division, providing users with an AI chatbot-like experience at the top of most search results. Furthermore, Alphabet is exploring other emerging ventures, such as quantum computing, chip manufacturing, and autonomous driving through Waymo. While Alphabet faces its share of obstacles, I believe the company has the resilience to navigate these turbulent waters and emerge successfully on the other side. Suzanne Fry, an executive at Alphabet, serves on the Motley Fool's board of directors. Bram Berkowitz has no positions in any of the stocks mentioned. The Motley Fool has positions in and recommends Alphabet. The Motley Fool maintains a disclosure policy. Quantum stocks crash. Is the hype bubble bursting? IonQ RGTI QBTS QUBT analysis. Quantum stocks tumble. Has the dream of easy profits collapsed? Brace yourself. Quantum computing stocks are taking a nosedive today, shaking the faith of even the most enthusiastic investors. But is this just a temporary blip, or the opening act of a long-feared crash? The answer isn't as simple as you might think. A roller coaster year for quantum stocks. If you've been following the breathtaking ride of quantum computing companies, you know the past year has been extraordinary. Leaders like IonQ, RGTI Computing, D-Wave Quantum, and Quantum Computing Incorporated sent shockwaves through the market, delivering astronomical returns. IonQ soared an astonishing 420%, and QUBT's gains eclipsed 2,500%. It seemed quantum was becoming the gold rush of the tech world, with many comparing these upstarts to the early days of tech giants like Nvidia. But today reality has hit hard. By midday, all these quantum stocks were down between 4% and 7%. After such a meteoric run, some investors are now wondering, is this the moment the quantum bubble starts to burst? But here's where it gets controversial. These companies continue to struggle with the same fundamental problems that skeptics have warned about for years. Progress, yes, but profits, no. Quantum computing has long been celebrated as the next leap forward, potentially transforming fields like drug development, cybersecurity, and complex finance. Yet the real-world progress, while exciting, is barely showing up in the financials. Consider the latest milestones. IonQ has pushed its trapped ion system past the 100-qubit mark, following a whopping $1 billion investment aimed at scaling to millions of qubits by 2030. RGTI too wowed with its 84-qubit Anka-3 processor, boasting a remarkable 99.5% gate fidelity and a notable partnership valued at $100 million. D-Wave, pioneering in quantum annealing, pulled in $15 million in Q1, up 500%, adding heavyweight clients like Accenture. Meanwhile, QUBT is making a bold push into photonics, sinking $200 million into a new Arizona foundry. And this is the part most people miss. Despite technical breakthroughs and headline-grabbing partnerships with giants like Amazon and Microsoft, actual revenue remains tiny, barely making a dent in the massive losses these companies rack up every quarter. IonQ's recent operating loss ballooned to $75.7 million. RGTI's revenue has shrunk, D-Wave stays deep in the red, and QBT still doesn't have a full-time CEO or steady sales. Hype versus value. Are investors fooling themselves? When you look at the numbers, the disconnect between market value and business reality is hard to ignore. Some quantum stocks trade at enormous price-to-sales multiples. QUBT's ratio has spiked past 6,800. In plain English, investors are paying thousands of dollars for every dollar of sales, a level reminiscent of the wildest days of previous tech bubbles. And did you catch this? D-Wave is planning a huge new stock offering, fueling fears about shareholder dilution, which is yet another red flag for cautious investors. Quantum's tough road ahead. So why aren't profits following the hype? The leap from laboratory breakthroughs to commercial products is massive. To reach practical, commercially viable quantum computing, scientists must solve deep technical challenges, especially around error correction and maintaining stable qubits for longer periods. These are no easy fixes, and many experts say it could be 5 to 10 years before quantum computers deliver real-world benefits for most businesses. There's also fierce competition. Technology heavyweights like IBM and Google are pouring their own billions into quantum research, but without the market's feverish overvaluation. Could their steady, less speculative approach ultimately win out? And for those counting on quantum to revolutionize cryptography soon, the lack of regulations and standards may slow real-world adoption, adding yet another layer of uncertainty. Key lessons for investors and a question for you. If you're thinking about betting on the future of quantum computing, today's drop should give you pause. Yes, the promise of these technologies is real and progress is exciting. But right now, these companies are deeply speculative, losing money, trading at sky-high valuations, and years away from proven market-ready products. So what's a smarter play? Many seasoned investors prefer stable tech giants with quantum exposure. Think Alphabet or Microsoft, where you get some upside without sky-high risk. But what do you think? Are quantum stocks just experiencing a temporary setback before another surge? Or does today signal the end of the hype-driven rally? Are investors creating the next big tech revolution? Or just repeating the mistakes of every bubble in history? Is now the time to double down or steer clear? Let's get the debate going in the comments. Do you agree with the skepticism? Or do you see a golden opportunity while others lose faith?